Hi guys, and welcome back to another video on the NZDayTrader channel. So today I'm just going to be talking about a quick sculpt that I did on PEB, and I'm just going to explain how I did it. So basically what we have in front of us is a chart of PEB, so this is Pacific Edge. So what I noticed was basically, so before, as you can see, this is a daily chart, and I noticed that the earnings was coming up on the 27th of May. So if we just replay it here, so the earnings were coming up on the 27th of May, and I saw that basically it's starting to break out of that sort of downtrend here. So here we can see the volume was coming in over here on the 20th of May, and we had some on the 21st, and we had a little bit more on the 24th as well. And this signaled to me that this was clearly running up towards this catalyst, which is going to be an earnings announcement. So basically what I noticed was that because this play is called a run up to earnings, it means that I can take a quick play off of momentum heading up to that earnings date. Because people are obviously buying here because they're anticipating that the earnings are probably going to be really good and that the stock is gonna, you know, shoot up into the sky or something and gap up just like this one did here. So I just want to tell you guys what I noticed before I started taking this trade. So here what I did was I had a look at this, the market depth right here. So on the market depth, what we can see is that, you know, we have quite a lot of buyers at 118, and we just had a huge buyer at 119. And because I noticed that there was a lot of buyers compared to sellers, this told me that this has the potential to go up by another maybe 2, 3, or even 4%. So what I managed to do was I got in at 119, and then if it was starting to go the other way, then I managed to keep my wrist tight, and I was willing to get out of my trade if it started to reverse. I knew this was a high probability trade because the momentum was basically heading to the earnings announcement, and I also was managing my risk so that in case the stock started to go downwards on me, I'll just get out straight away, because in my mind I have a mental stop loss level. And part of my game plan is if the trade starts to go the other way or it's my stop loss level, then I mentally know that that's it, I need to get out. I don't care what happens, but I need to get out, because part of my rules, it means that I need to get out because of my stop loss level. So I basically had a 1 cent risk on this, and then I played it out to, I think it went up to about 122. And as soon as it went to 122, I haven't got the image for that, but I saw that a lot of sellers started to get onto the sell side. So that means I needed to get out of the trade. So basically I started to get out of the trade at 121, and then I think I sold half of my position, and then the rest I just sold at $1.20. So this allowed me to make a $400 profit in one day. So this is a great way if anyone wants to make like quick trades. Like, even you can do it on a daily basis, but like you can do it on like a 1 day or throughout the day as well. So this is how I managed to make like $400 really quickly. So most of the fees actually, because I used like a 40 grand position, I had like $140 or something worth of fees. So that basically took away some of my profits. But that's okay, that's all good. Yeah, so I thought I'd just explain how I actually made that profit. So if you look at where I got in about 119, and I got out around 121. So I made like around about a 1.5, 1.6% return. Basically I managed to get in at that 119 level here. So I'll just show you where I got in. So 119, so that's where I got in. So if we just play this one forward, so next day this happened. So there was some resistance building up around about near that 122, 121 level. So as I explained earlier on my other videos, how I use value areas to map out support and resistance levels, this was building like a short-term resistance level, and then basically just heading up to the earnings. So I just quickly managed to get out of the trade. So I started to get out at 121, just up here somewhere, rest at 120, and then next day it actually finished at 121. And then obviously the earnings came out on the 27th of May, and then we just saw a huge drop over here, about 3.4%, but recovered some of his loss as well. So it doesn't matter like what the company says. Like, companies are going to say, you know, record this and record that and record profit and this and that, and at the end of the day it's still going to go down. The only way you can tell whether a company or the share price is going to still go upwards is just, like I said, price action. So I live by price action. So if the market starts to go up after an earnings announcement, or starts to go down, then kind of consolidate and starts to break out, you know it's starting to break out because of this right here, this earnings. And a good time to get in is, you know, as on the breakout, or you can even get in like up here. Just depends on what your plan is and how you wish to trade. But again, I've told you guys multiple times, make sure you have a stop loss limit. Stop loss is just gonna make sure you don't get into some, you know, nasty sort of downtrends and be holding forever. Let's look at some other stuff. So we saw FPH as well. So FPH today had like a massive downtrend over here. So it started from here, just saw like a 17% decline. So this is huge. And this is simply why you don't trade like a, you know, so you don't trade through earnings now. So we actually saw the price of Fisher Paykel actually selling off before it even reaches earnings. If it's selling off before its earnings, then it basically means it's just in a downtrend, and that's why it's always good to wait for confirmation. So confirmation to me is that, is the price holding above a certain level? Has the price gone up? Is it holding there? That means are there buyers present or there's more sellers present? So yeah, so just make sure that if you are trading, make sure you trade after the material announcement. I've been saying this for like, I've been on YouTube for like a year now, and I've been telling you guys, like, don't trade for earnings announcements. You need confirmation. It's such a material event because you know, investors trade, they can take it in all sorts of ways, you know, and it's quite a high volume event. So, you know, investors are going to start reducing their positions, they're going to start increasing their positions, and yeah, so any material announcements are always going to cause a lot of volatility in the price. But I mean, if, again, just for you long-term investors, if you guys are holding long-term, then, you know, you're supposed to be ignoring all this crap that happens. You know, all this stuff shouldn't be mattering to you if you're holding long-term. So you should be thinking about, I don't long-term invest, so I don't know about what long-term investors do. I think they hold for like all the way till they're 75 years old or something like that. But yeah, no, that's not me, because, you know, I'm trying to look for this sort of stuff, the short-term stuff. And then what am I doing? I'm holding in straight cash, because cash is king, we all know that. And if you got a cash in a brokerage account, it can just sit there and then you can just chill. You don't have any stress, you're just like, but if you're down on a position and your investment account shows you down like $5,000 or something, then for a long period of time, you're always gonna look at that account and be like, shit, when's it gonna come back up? But no, that's not me. So I used to be like that, but not anymore. So yeah. So if you guys want to be successful traders, I always say this, get some education. I also have a free course available, a free ebook. Definitely read the ebook, because the ebook is going to show you the mistakes that I did and some of the mistakes and stuff to avoid while you're trading. So really important. So free ebook, so definitely download that. And again, if you guys want to be professional traders, then just contact me and we can see how we can go about that. Sweet. Thanks for watching my video, and as always, like my video, subscribe, check out my Instagram for any profits. I haven't posted many profits lately, and I will tell you why. Because the market is just crap at the moment. So I think I've explained in other videos, like these sort of up patches here is where you can make good money. But you know, when the market's kind of selling off, as you see here, just in a downtrend, and don't know where the New Zealand market's going to go from here, but right now it's forming kind of like in a descending triangle, and then what we need is probably just some sort of just break above here, consolidation, and we just need to go back to all-time highs. So that would be ideally the case, but yeah, we'll just have to see what happens. Again, confirmation, very tricky to trade during these times. I know a lot of investors are probably like, you know, their positions are probably down at the moment. Everyone's probably stressing out, saying, shoot, how do we, you know, what do we do? If you're a long-term holder, then you just do what you do, just hold long-term. If you're a trader, then you should have your stop losses that should have stopped you out, and you should have gone into cash. So that means if you made losses during this period, it's okay, because you're supposed to keep a long-term horizon on your trade. So you're supposed to be trading consistently and building your profits in your account. And once you do get professional, if you want, then you can also like withdraw some of those profits and create income from it. Alright guys, I hope you enjoyed this video, and happy trading.